The world is entering a new monetary and fiscal regime, and Bitcoin will be the main beneficiary in this environment. Hi, everyone. Welcome to another Bitcoin Intelligence Report video. My name is Sina, and I'll be going through our report today. Today is Monday, July 21st, and we have another report as we have every Monday. So I'm going to review the broader perspective with a focus on the macro section, which I primarily write. I will also cover some of the findings in the other sections, the on-chain and monetary mechanics section. All right, so let's dive in. The title of the report is "Bitcoin is the clearest beneficiary of the new fiscal era." Essentially, what I'm trying to do in this report is I want to paint a picture of where Bitcoin is and what are the main mega trends that are shaping the future of our world, and where Bitcoin sits in all this change. So I'm going to mention a few mega trends in the broader picture. One of them is we just got the stable coin law passed, the Genius Act, which is going to pull TradFi closer to Bitcoin. It's going to supercharge the stablecoin industry, which is generally considered the gateway to Bitcoin and other cryptos. So the more prosperous and the more active this industry is, the better for Bitcoin. Uh, Importantly, we also discuss the broader changes in the fiscal policy across the world. When you look at the data and reports, every country is expanding the spending. US, China, Japan, they're all ramping up various kinds of investments and spending, including a lot of military spending, all of which will be adding to the money supply and supporting hard assets like Bitcoin. We also discussed the bond market, which is collapsing across the world. Bond yields are rising, and policymakers are scrambling to keep them from rising further and keeping their bond markets liquid. All of that requires extra spending and monetary expansion. And markets are front running these waves of liquidity. For that reason, Bitcoin is at all-time high, Nasdaq is at all-time high, S&P at all-time high, gold all-time high. Pretty much every market is reacting to this massive wave of liquidity, and at the same time, bond yields are rising and bond prices are dropping. Money is moving from those assets into anything that's harder. Um, at the same time, this is basically applying to all markets. But when you look at Bitcoin particularly, it's benefiting from massive amounts of new demand. Institutions are basically devouring Bitcoin. There are Bitcoin treasury companies popping up everywhere in the world, whose whole goal is to buy more Bitcoin, print the fiat, and buy more Bitcoin. At the same time, ETFs are also uh, uh, buying more coins nonstop. And together, Bitcoin treasuries and ETFs hold about 11% of the supply right now. So in just a span of a few years, a massive buyer has showed up that has already collected 11% of the supply. And ETFs basically are 1.5 year old, and they already have 7% of the supply. And if they just continue like this year after year, considering Bitcoin's fixed supply, price has to run pretty rapidly. At the same time, we are hearing news about Trump wanting to allow the 401k market to invest in Bitcoin. That is a massive market, $9 trillion. And if they can allocate a percentage to Bitcoin so that they don't fall behind other funds, this will be another massive source of passive buy side pressure for Bitcoin. So we're just adding more and more types of institutions. The existing institutions that are buying Bitcoin are nonstop accumulating, and then we are unlocking new types of institutions and new sources of liquidity. Among all of this, Bitcoin apparently, I mean, when you look at this picture, Bitcoin actually becomes one of the lower risk assets, unlike conventional thinking that puts Bitcoin in the high risk category. Actually, Bitcoin is now one of the clearest winners and clearest beneficiaries of this new regime, making it a very compelling choice. At the same time, our models show that Bitcoin still not is not overheated and not showing any signs of being close to a cycle top. So moving on to the rest, where we kind of dive deep into these dynamics further, we have a discussion on the Genius Stablecoin Act, and at the end of the report, Renault is also touching upon this from a different perspective. But we have a very important piece here. I definitely invite you to read this part very carefully. This is a review of what's happening in the world as far as spending. And we are observing, uh, importantly in this chart, we are observing that analysis basically show a lot of this spending is on autopilot and mandatory and has to increase over time. So uh, there is just not much anyone can do to reduce government spending. And this is sort of on autopilot and is projected to increase to above $10 trillion by 2034. Constant increase, nonstop. It might have some short term hiccups, which will scare everybody, but the general trajectory is up and nothing stops the strain really. Then we look at what's happening in the bond market. As I said, we look at the global bond yields across the world, and a very concerning sign that liquidity is drying up in the bond market. And the typical way to solve this is government stepping in and trying to do QE and purchase a lot of these bonds to keep them liquid. Very bad economic developments are happening in Japan. Their exports are stalling, and at the same time their yields are rising fast, and the government has pledged even more spending. So um, uh, at the same time, despite all of that, their bonds are getting less and less liquid and more volatile over time. And as I mentioned, institutions are devouring Bitcoin nonstop. ETFs have captured 30% of the trading volume. So they are increasingly driving the show, running the show. And we have Bitcoin treasuries. We have a lot of sovereign funds that have not explicitly mentioned what they're doing, but lots of rumors about those kinds of investors wanting to own Bitcoin, as well as uh, pension funds and other types of institutions. This trend is nowhere near stopping, and will bring in massive amounts of fiat into Bitcoin moving forward. Uh, the other thing I want to mention is, despite being at the all-time high, our models show Bitcoin is still low risk relatively. Quantile model puts us at below 70% risk, and we would get worried probably closer to 90% or above 90%. So we have a ways to go, and when you look at our volatility adjusted power law index, that's also at 56 out of 100, which is historically very, very low risk. We are pretty close to the long term trend. No sign of significant overheating is observed for now, but we will keep watching this. The rest of the report talks a little bit about the Fed. A very important commentary coming from Secretary Treasury Bessent, and you could read that in more detail later. We also look at on-chain data contributed by Wizard, where we look at the short-term holder MVRV and SOPR indicators, and the standard deviation bands, which show that we still have quite some room to grow. We also look at realized profit and loss by cohort. We look at realized profit and loss of the short-term holders, and some models developed by Checkmate on those. And URPD is also another chart that we have been recently discussing a lot. This shows the distribution of a cost basis over time. And another interesting trend is the uh, recent increase in open interest, which shows increased excitement in the futures, in the derivatives market. And also, we review the liquidation points based on the heat map of short and long liquidation points. And also, this chart is very interesting. It shows heating of the funding rate in perpetual market across the board. When you look at all assets, all crypto assets, things are warming up, which means more demand is coming in. But this is a double-edged sword. If it gets too hot, it's a pretty potential sign of a bubble forming. But it's warming up, and in the early stages of warming up, that's actually a great sign. That's a precursor for a significant price appreciation. Lastly, as you know, our report also dives deep into monetary mechanics, and here we review the Genius Act from a different perspective, and discuss some of the things that relate to stable coins and the euro-dollar system and the dollar dominance, and the potential effect on Bitcoin. Importantly, we touch upon the U.S. retirement market gaining access to Bitcoin as well, and what this can cause for Bitcoin. And we revisit the TGA refill issue, which we have been flagging recently as a potential hiccup in the short term. So, of course, there's a lot of detail in this report. This is probably one of the longer ones. There are so many important trends and events happening that we wanted to review, and from multiple perspectives. So definitely make sure to review the report in full. You'll find the link in the description below. And we look forward to receiving your feedback and comments. If you are not part of Bitcoin Intelligence family, you can sign up using the same link, and either monthly or yearly, to get access to our weekly reports. We publish once every week, about 50 reports a year. All right. With that, I'll end this video and wish you the best. I'll see you in the next video. Thank you very much.